Okay, so this is how I trade options on NVIDIA every week, and every week my average profit is around $1,000 on $5,000 investment. So I'm going to pretty much explain how does it work. So I'm using strategy called Iron Condor. So it means that I have to break even points. One is 826.10, another one is 913.90. So if the price within next 3 days closes in between these two break-even points, my options will expire worthless and I'm gonna get premium, which is $1,390 minus commission. So so to better understand, I this is how I learned. So expiration is in May 3rd, which means in 3 days. Yesterday, on April 29, uh, I bought this option strategy. So it means it's like I have 4 days, right? So right now I have 3 days left until expiration, and I am using interactive brokers. So here is my trade. So right now I am in the profit of $2,007 because I bought 10 contracts instead of one. So if I buy one contract, it would be $200, but since it's 10, it's multiplied by 10, then it's 2,000. So why would I take 2,000? I paid almost 14,000 yesterday. Actually, I got credit for it. So at the expiration, I will wait until it expires and take my premium of 14,000. But as I said, if you need money or if you think something big will happen, then you can always take money right now and close the position. So here is May 3rd. If I click on May 3rd, then here is what I did. So currently the price is whatever 870, and I did buy I sold 900 call, and then for protection I bought 950 call, and then also here I sold 840 put for $8.05, and then I bought for protection 805 put. So here is the strategy. So the final amount here is between minus 1228 and 1188. So it could be around minus 12, or I can change it to, let's say, minus 12. So going down. So what is important? You never, ever, ever, ever put a positive number here, because if you put positive number, then the money will be taken out of your account. So right now, money goes into my account, right? So let's say I buy it for minus 12 credit, which means minus 12 times 100 shares of contract of stock plus one contract. So it's one contract. So the minimum margin is $5,000. If yesterday I bought 10 contracts, so in this case for 10 contracts, then the margin would be $50,000. So it's not updating yet, right? Okay, so here it shows margin is 51,000. So if you don't have 50,000 in your account, if you just have 5,000, then you can just sell one contract and make 1,000 or whatever, $200 every week. Every week is expiration. You can see 7 days in between. So how does this strategy work? So here's how I learned. So this is the current price, and this is like a diagram. So here is 840 put that I sold. So I sold this put for $9.34. So the credit I received is calculated like this: 934 times 100 shares of stock times number of contracts. In this case, let's say just one contract. So I received $934 into my account. And then I did buy for protection 805 put for $2.97. So 297 times 100 times 1, it's like, so I paid from my account 297. So now when I deduct these two numbers, 934 minus 297, so 934 I got, 297 I paid, so my credit is 6.37, of course times 100 times 1, so it comes out to be about $637, right? Okay, so it's in here, so I put it in a little table. So I'm selling 840 put minus I'm buying 805 put. So this is the calculation. And in this case, um, I'm using one contract, so I got $637, right? And then the same thing for the call. So I sold 900 call for $9.99, and then I received uh, $9.99 times 100 times one contract, which is $900. So in this case, and then I bought 950 call for protection. So it means that in this case, I received $756. So these two things are credit into your account. So which means broker automatically pocket puts these two things into your account. So it means that you would get for one contract, I was calculating 10, $1,390. So this is the premium that you paid to whoever bought this iron condor from you. So now most important thing is break even 1 and break even 2. So break even 1 is when you take the larger put, which is 840, which is this one, and you deduct this maximum premium. So you deduct maximum profit, which is $13.99 minus commission. So basically, you take 840 minus 1396. So basically, yeah, 1390. This is with commission. So let's just make it 1399, right? So, and then it comes out to be approximately 826.064, which is 826.1. So this is your break-even point 1. Break-even point 2 for the calls, you, instead of deducting 13.99, you actually are adding it. So basically you are adding, you take smaller call and you add 13.99. And what is this 13.99? As I said, it is 637, which is this credit, and 756, which is this credit. When you add these two, you get 13.99. So now if you look at the chart, then you can see 826.10 to 913.90. So this is the range. So whether it goes up or it goes down, as long as it's in between the price in the next 4 days, I'm gonna get my 13.99 times 100 and times one contract, which is like $1,399 minus commission. So that's basically for this week in May 3rd, which is Friday. And of course, you repeat the same thing. So also yesterday I bought May 10, expiration May 10, the same scenario. And so now what happens in case, so I can buy for next 5 or whatever, if I think price will go in between. But what happens if the price starts coming up, and comes almost close to this number of 913. When in that case you roll it, which means you sell your condor and then you buy a new one with a higher uh, the higher strike if you think that it will close above 913. Or if it starts going down, then of course you roll it, you close your condor and buy a new one. So to roll, for example, this one, I might roll it. So you click right click and then you just click roll. When you click on the roll, then you will get a new pop-up and then it will give you something like this. And then here you can, once it opens with a chain, then you can select a new buy and sell position and they will come out in here. So why would you roll? Because I don't want to lose $21,000, right? And or more, right? So if I roll it to, let's say, next month to June or July, whatever, in that case, I'm not gonna receive when it closes. I'm not gonna get maximum commission because I'll have to pay for the roll, which means I have to pay for whatever I closed for, and then whatever I'm gonna get when I roll, in, let's say in June or July. So I'm gonna get probably 50% less if you roll on time. So that's about it. Hopefully it helps.